Welcome to our daily analysis on the 24th of the 6th, 2019. Today I'll just be talking a bit about the analysis I sent out this morning. There will be daily analysis as per usual, as well as the written out analysis. The per trade analysis on the copycat system will be done on a separate EduInvest group. This way we can assist both the clients looking for entry and exit points, as well as clients just looking for the daily analysis. Okay, so if we look at our current economic calendar for the coming week, just grab my big pen, my pen software quickly. There we go. If I grab my economic calendar, I can look that the news already came out for today. Some high news on the Australian dollar, if I'm not mistaken. Yes, Australian dollar, as well as some European news with a bit of Japanese news. There's some more European and US news later today, however it is medium term news. That means that it could potentially have a big impact on the market. It could also potentially have a low impact on the market, right? We also have some news coming up for tomorrow. So what you need to do with the news is, when planning a trade, right, you should look at the next 2 to 3 days, depending on how long you plan to hold this trade. At least the next 2 to 3 days. For example, you never know how long you could potentially hold the trade, right? A daily trade could end up being a swing trade, for example, or a scalp trade could end up being a daily trade. Your trades, if they continue to run in, the profit could actually run longer than you plan. So just make sure that you have the next 2 to 3 days of news. Keep track of the news for the next 2 to 3 days, especially the high and medium term news, if it is on the currency pairs that you are trading, as they could affect the market while you are maybe not at the PC, or while you're at work, or whatever the case may be. You could even be in front of the market when it happens, and it could spike so fast that it could potentially turn a winning trade into a break even, or even worse, into a losing trade, right? So we know that we have a bit of US and European news later today, however it shouldn't affect too much. If you are planning to trade Australian dollar, just note that there is news early hours of this morning at 1:45, so keep that in mind. However, it is medium, so it could have a big or small effect on the market. We won't know until it actually happens, right? We also have a speech happening on the Japanese yen at 10 to 2 tomorrow morning. Then we have and that is a high risk news event, so that could potentially, and now remember, when it doesn't have figures here, it's normally a speech, as this has figures, which shows that it's gonna have almost an instant impact in the market. When you don't have those figures, when you just have absolutely nothing, it's normally indicating that there is a speech happening. Now, a speech doesn't impact the market immediately. It can, however, especially when it comes to things like Brexit and stuff, where there's a lot of volume around the new sentiment, then it can have a massive instant impact. However, something like this, where you just have the no statistics, you can say, is just a speech, and this normally impacts long-term trades, right? So in other words, let's say the Japanese yen is trading bearish, and in the speech they talk about it potentially trading bearish. You won't see it happening instantly. You will see the market starting to give signs and patterns of a turnaround in the market, right? For the market to start trading in the opposite direction. So most of these are just speeches. As you can see, these are just speeches or meetings where there is no actual output. So these are more long-term trades. Then we have some Canadian and US news coming out tomorrow as well, around 2:30 and 3 o'clock. These are medium-term news impacts, and they are statistics again, so they will have an instant impact in the market. Whether it's a big impact or a small impact, we cannot say until the statistics come out. Then after that, we have some high-risk news events or high-impact news events later on. Two of them being speeches, one of them being a statistic news event. Right, and these will all come, or these two will come out at 4 o'clock. The speech happening at 7 o'clock the evening. Right, so tomorrow keep in mind that we're going to have some Japanese news and we're going to have a lot of US news. So if you are planning to trade the Japanese yen today or the USD JPY, just keep that in mind that tomorrow there could be a lot of news potentially spiking you out of the trade or potentially spiking you further into the profits. So if you are unsure, rather just stay out of the market. Right? It's always better to not lose money, or to not trade and not lose money, than to trade and to lose money. Because as traders, we must know when to trade and when not to trade. Right, then Wednesday morning. Wednesday morning we have some Australian news happening again, some high risk news. We have a interest rate decision coming out, as well as two speeches, a statement that's going to come out, and a conference. So there will be some movement on the Australian dollar at about 4 o'clock, 4 to 5 on Wednesday morning. Right, so a lot of Australian movement on Wednesday. So if you are planning to trade Australian dollar, just keep in mind that tomorrow morning as well as Wednesday morning we could potentially see all the way down to 4:30. Most of it will be coming out at 2:30. So if I just take that, we can see all of this high impact news will be coming out at 2:30. So on Wednesday at 2:30, and you can see it's all statistic based news, right? Which means that at 2:30 on Wednesday we could potentially see a quick spike in the market, either towards or away from the dollar, as there is a lot of news around that time. There's 5 news high risk or high impact news events happening around 2:30 on Wednesday afternoon. So please, on Wednesday afternoon, keep that in mind, that the dollar, you could see the dollar potentially spiking across all the charts, whether it's spiking towards the positive or towards the negative. In other words, whether the dollar is trading bullish or bearish, there could be a potential big spike that way. And then on Thursday, you could look at Thursday as well, or you could look at Thursday, tomorrow, or Wednesday. And if you're still holding trades, if not, if you're planning new trades, then you could revisit the economic calendar just to check out if your new pairs are being affected by the market or not. But on Thursday we have some European news, some high risk European news, and some more US news. So for this week we should keep in mind that we have a lot of Australian news, a bit of pound news, and a lot of dollar news. A little bit of Japanese news, but a lot of dollar news, mostly dollar news. Alright, so just keep that in mind. Okay, let's move on to the charts. Righto, so if you have any questions or anything like that, please feel free to let me know in the comment section. If you would like to know anything or ask anything, please feel free to ask me or let me know. Okay, let's have a look at the weekly chart on the dollar index. So on the dollar index weekly chart, I said that from the start, remember, what I say is just my opinion. It's my speculation of the market. It's my thoughts of what the market conditions are like. Does not mean I'm right. It also does not mean I'm wrong. Right? We're just trying. No one knows for sure whether or not it's gonna go up or down. But yeah. So we're gonna have to just we're just gonna have to analyze and continue to trade it the way that we've planned. And if our plans fail, we'll just have to go back to the drawing board and create new ones. So I've got this A down to a level of B with a pull up to a potential level of C. Right, this trading plan has been here for quite some time. It is a weekly chart, which means that from this level to this level we could potentially see the market still take another 65 to 70 weeks to get down to this bottom level. So if you can do the math, I mean, that's more than a year worth of movement that we could potentially see the market move down. Right, so but anyway, I've said that I've had a level of A down to a level of B, a pull up to C, potentially looking to fall down to D. We also have the market ranging to the upside, giving us a bear flagpole. So this could show, let's have a Google search quickly on the bear flagpole. Okay. The bear flagpole pattern. I'm sure I have covered this in a previous analysis, but we'll do it again. See, so if you start analyzing from the bigger charts down, then the bigger charts take longer to reach their levels. So for quite some time we're going to be looking at this bear flagpole. Right, but this is the idea. We had the movement down from A down to a level of B, this impulse, then it starts to correct itself to the upside before falling down further. Right, there's multiple examples of this. That's not a bear flagpole. Let me just find another one. Here's another example of the bear flag. We have the market moving down, and then starts to correct itself to the upside before breaking further down. Right, so these are just some examples on Google that they give you of the bear flag. This is a bull flag. Opposite applies, where you have the market moving up, and then starts to consolidate down in this channel or in this range, but towards the downside, making lower lows and lower highs, and then it changes and shoots to the upside. So we see something very similar happening here, where the market impulse down and starts to consolidate to the upside. It's now at a 61.8, or it has been there for the past 9 weeks, and we could potentially see this market start to break further down. So then I went down into a daily time frame, and I showed, okay, well, we see that the market is currently at the bottom of this channel. So on a daily plan, however, we could potentially see the market move to the upside. So on a weekly we've got a bear sell, which is further down. On a daily we've got a bull buy, right, to see this market continue up. I would then further on go down into the 1 hour or even into the 4 hour. It doesn't necessarily have to be the 1 hour, it could be the 4 hour, but I'll use the 1 hour. And what I would like to see is, as per usual, this is normally where I do my triggers. So I do my analysis on the weekly, daily and 4 hour, depending on how the chart is looking. And I'll normally put in my analysis for my entry on the 1 hour. So on the 1 hour, what I said on the analysis was, I either want to see the market start to push up from this level, or see it drop a little bit, maybe even just below this channel line, because remember, these channel lines are subjective. I put these channel lines in, which means not everyone in the world is seeing the exact same channel lines, and that's what makes pretty much every other indicator or any other line you put in is all subjective. The only thing that's not subjective is the candlesticks, because we all see the same candlesticks and same candlestick patterns. But what I would like to see is the market push down to this level, then pull up and pull down again, giving me a higher low. In this higher low region is where I will potentially look to take a buy, or not necessarily buy on the dollar index, but know that this is potentially the area where I want to go to my other charts and look for dollar strengthening trades. In other words, pound dollar sells, euro dollar sells, Australian dollar sells, New Zealand dollar sells, USD CAD buys, USD Chef buys, and USD JPY buys. Right, I'll be trading towards the dollar at this level to see the market then continue up to the top of this channel. Right, that is my potential buy opportunity that's happening right now at this key level. There's also potential sell opportunity. If the market should continue to break further down, I would like to see it go down, pull up again to give me a lower high. Right, and at this key level, when it pulls back, of course I will have A up here down to a level of B, pull back to a level of C. I'll put in my fib from B up to A, giving me a nice fib level over here to see the market push further down. And then once I find that, I will then enter my sell, or not necessarily enter the sell on this pair, but look for dollar weakening trades instead of dollar strengthening trades. So that is the potential buy and sell right now. Remember, if we're going to buy, we're going to be buying based on the daily channel. If we're going to sell, we're going to be selling based on the weekly bull pattern, right? Bear flag pattern, sorry. We'll be selling based on the weekly bear flag pattern. So if any of these plans actually do tend to work out, whether or not we can trade towards the dollar or away from the dollar, then we could potentially go over to our Euro USD, as it moves the most, as it's the most correlated pair with the dollar index. And as you can see, I've said here's the daily support level that I want to see this market, because now this daily support level is a very key level for the market to react. So we could potentially see this daily candles pushing out of this range, a breakout strategy where it will break out and it will pull back again. We'll have an A at the bottom, push up to B to find our level of C, where we could put in our fib, to then extend it up to a level of D. That is one potential trading plan. The other potential trading plan from here, if the dollar does decide to strengthen, is to trade it further down from this level of resistance. It's actually a strong resistance area, not a support area. So I can actually change that. It's a strong resistance area. Alright? So at this strong daily resistance area, we could potentially see the market fall further bearish. Now we can go down into a 1 hour and look at what I want to potentially see before the market starts to trade in either of those directions. Right? So what I would like to see is the market either pulling down from this level before pulling up again, giving me an A down to B, pull up to C, to start trading it further down to D. Now starting to trade the bear direction from this daily chart to start trading it downwards. Right? Or I would like to see the market break through this strong resistance level that we have on the daily chart and move to the upside before retracing or pulling back, giving me a level of A up to B with a pullback down to C, where I would enter in my trade to trade towards or away from the dollar towards the euro, and to see the market move further bullish. So if you notice, I always trade one of two trades. I always trade a trending trade where I'm buying the higher low, in this case buying the higher low, or selling the lower high. Right? I'm either busy trading this trend based trades where you're doing this, as well as in these trend based trades, if I was to trade it up here, this would also be seen as a breakout trade, as you're breaking this level of resistance and you're continuing to trade it bullish. So out of the four potential ways you could trade the market, where you could counter trend trade, trend based trade, range bound, or breakouts, I only trade the trend based and breakouts, if that helps a little bit. But you will see as we go along with the copycat system how I take these trades, how I manage these trades, how I exit the trades, right, as well as the analysis on those trades. Thank you very much. Have a good day.